Bloodbath is probably the only word that I can use to describe what's going on in the markets right now. And it's not getting any better. And it brings back PTSD, questions of the famous GIF, which is the Fed killed low inflation. The Fed killed low interest rates. The Fed also killed stock market bulls in 2022. And how are they coming for those that bought the bottom or thought they bought the bottom in 2023? That is the question we're going to be trying to answer today, and subsequently trying to talk about the one level that you guys have to watch out for today. And if this breaks, all hell is going to break loose along with it. We got PCE coming out. They would have been already released at the time of this video's release. So make sure you guys go check that out, what it's actually doing, how the markets are reacting, because we got GDP today and they had wanted nothing with it. So going over to GDP real quick. GDP comes in at 2.8% and markets just rally and then fade the entire day. So mostly seen on the S&P, right? This will be a clear indication. If we go to the 15-minute chart here, you guys can see what I'm talking about, right? So pre-market, we're kind of chopping around. We start the market off right off the rip, going into the 12 o'clock hour, and then like clockwork, reversal time. We nearly come in within striking distance of that hope of 547.91 being the close, right? That's the level you need to get back above today, and essentially close above it, because that would signify doom and gloom, 2 consecutive weeks of a lower low, and that is starting to form a trend to the downside. And a lot of the news, right, these not really bullish earnings coming out of the bigger tech stocks, how is it going to set up next week, which we are expected to get more tech stock earnings? Any indication of how this week has been or latest earnings signifies more downside in those stocks. And there's not only downside in those stocks, right? We can talk about this being rotation. If we jump to the heat map real quick, I don't see any rotation, Tom Lee, because, well, this is just a pure bloodbath. Yes, going back to the Russell, right, just for a second to quell this argument, right? S&P and NASDAQ yesterday were nearly down 3 and 4%. That's very uncanny. That's a 2 standard deviation move in the NASDAQ or the S&P. Rarely happens. If we look at the Russell, right, it's just been chopping around. So as the S&P and NASDAQ have been shedding completely everything, we see the Russell being like, hey, yeah, cool. So it's not real rotation. It's basically sell this crap over here. That stuff looks discounted a little bit. And okay, buy it as like a transfer of money. But everyone's dumping into bonds. And we're going to be talking about why that is. But before we get to that, guys, if you wouldn't mind helping the channel out and hitting the subscribe button down below, along with bell notifications, so you guys know when we go live for the live streams, along with when the Weekend Deep Dive comes out on Sunday afternoon, where we go over all the levels we have to watch for. If you guys paid attention to, you would have known to be bearish this entire week. I was a little bit on the bullish team, and we've had some comments of time to put the bear hat on. I'm very close to putting the bear hat on, and we're going to be discussing of one of the indicators that is telling me, hey, it's really time to put the bear hat on. But I want confirmation of that, and we're going to be giving you guys what you have to confirm today, the level we have to close above, and also some of the things that are screaming bear market returning, flashbacks of the bear market. So it's going to be a jam-packed one. So let's dive into it. What are people buying? And the simple answer is bonds. They are buying these bonds like no tomorrow. As you can see, the 2-year yield getting pushed down lower, the 20, the 30, all getting pushed down lower on last night. So that means TLT, right? Having a nice bounce off of its lows and kind of catching a breath around here. So everyone's going to the bond market because there's a lot of turmoil in various yields. Specifically, the BOJ is weighing rate hikes, right? Japan's Bank of Japan is weighing rate hikes next week. Detail plan to have bond buying. Why is that? Simply put it, they borrowed a crap ton of money and they can't pay it back. So now they're trying to find out how they're going to pay the treasury bonds that they sold back, right? So all this is going crazy in Japan. US yen in basically trade is going bonkers right now. So not going to dive into that too much, but this is basically turmoil for one of the world's largest economies, along with everything is not hunky-dory in our favorite country, which is China. Gotta love China. They have broken their 200-day moving average. I said it was bad when they broke their 50. Now they have broken their 200. 2 consecutive closes is going to be today, possibly. So if China does not get back above this, well, let's just go back and snapshot in history of what happens when we break the 200. Well, simply put, last time this happened, we fell approximately 24%. That is a true bear market correction, rip your face off rally. So is the S&P and the NASDAQ heading for a similar fate? Well, let's take a look at some of the bigger name stocks, right? NVIDIA looking like it wants to hold that 50, but not really, right? Breaking below the 50, that 200, and there's a lot of gaps to fill. This is looking weak, not necessarily bearish yet. We really need to take out this pivoting low right here at 106. You take that out, you keep going, you got plenty of gaps all the way down to about $87. So again, keeping that in mind, and that 200 sitting at $78. So NVIDIA not looking so hot. Also, like we got AVGO breaking the 50. Tesla just getting crammed below the resistance point. So now Tesla, in my opinion, is bearish. However, if they want to hold around this level, it'd be a very interesting trade. Netflix not looking too hot, breaking below the 50. Microsoft severely broken below the 50. Apple not there yet. So Apple is the last shining hope in this market, which is concerning considering the last time we had a big turmoil drop, Apple was the one that triggered it because it was the last holdout. Similarly, Amazon dropping as well. So going back to what you guys need to pay attention to, and then we're going to get to the indicators that are screaming their heads off. Simply put it, we do not need to close above 541.91. We need to close above 547.91 on the S&P. So you're looking at a minimum need to close at a 2% day, essentially. That is a big ask, and that can only be achieved by PCE. Now, what is PCE expected to come in at? Well, let's simply take a look. 2.4 and 2.5 respectively. Core coming in at 2.5, so slight less decrease. So they're basically replicating the CPI expectations. Personally, I think you're going to get 2.6 across the board because PCE does not drop like CPI, and they're trying to, in my opinion, give you a very rosy picture. I don't believe the number that it's going to come out this way. I could be completely wrong, and obviously when you guys are seeing this, you would have already known the number, so you know what my expectations are. But here's the thing, the number doesn't matter. It matters what the reaction is going to be. If you get these numbers, yes, there is a possibility that you rally 2% on the S&P. And also, I don't know what the bears are positioning, right? So essentially, if they've loaded up on shorts, that could ignite a short squeeze. If they haven't, well, the bulls are the only ones that have to step up. The bears can just kind of sit on their hands and make money. So again, looking at this is broader selling in my opinion with the volume coming in, right? Massive amount of volume here, and the NASDAQ's even worse. So right, for the S&P, you need 547.91, and you need to get there in a hurry because that will be 2 consecutive week breakdowns. And it's not looking too good, right? If we say this was an A to B pattern on the way down, we've already completed the A to B pattern right now. I do see this gap fill kind of coming for us right here. We actually did fill it today. However, I would like to see the S&P bounce around 533 as a point of contention where you had a little bit more volume. Right now, bouncing off this gap fill is not necessarily the greatest thing in the world, especially when you were pushing all day and then just got slammed down that completely 2 consecutive days below the 50. That is looking scary right now. What's even more scary is the NASDAQ. The NASDAQ, well, you just broke, right? Like there is no hope for you right now. And the problem is you're coming up on a very interesting point. An area of volume that you really need to be buying around, and subsequently the previous all-time high going back in the early 2024 days, right? So when we were chugging up and then we had our pullback, that would be a critical level to not break. You break 449.34, well, yeah, this is going to be one of those things are getting really, really bad at that point. If the NASDAQ closes above 472.80 tomorrow, okay, then there's some salvaging this massive run, and I do expect the run to continue, and I'd be betting bullish into the weekend. What's the probability of you getting that? You have to blow PCE out, and the bulls have to step up. Otherwise, the question becomes, are you starting to fulfill the prophecy that has been brewing for so long? And that is simply the yield curve. The yield curve has done something it has not done in so long. Form a new low on the inversion, right? Previous peaks forming new low. Reverse repo actually coming down a little bit to the low. So we're seeing buying of bonds and reverse repo draining a little bit fluctuation. That's starting to throw up red flags. My thing is, I'm going to keep an eye on this inverted yield curve because we are only 0.2% delta away from uninverting and everything going like crazy. And also, when everyone says the bank turmoils are over, I like to cite you one stock that I want to pull up for you, and that is NYCB. Everyone trying to buy this thing on the earnings, but they reported worse losses in their mortgage and commercial real estate portfolio. That means this is not over. There is plenty of turmoil waiting to happen. And all it's going to take is some bank saying going under because they can't pay stuff out. And I don't think the Fed is going to cut rates in July. And that September rate hike, I don't know if it's going to happen. But then again, we have to keep an eye on that. We also have to keep an eye on the VIX because the VIX looks like it wants to tear your face off. So make sure you guys watch the VIX. Make sure you guys watch the S&P and NASDAQ. NASDAQ needs to close above the 50-day moving average. S&P needs to close above 547.91. Again, that's a pretty massive move. 541.91. I apologize. But we need to close above that level in order to sustain this bullish momentum to the upside to salvage tech earnings next week. Everyone can keep pointing to the Russell and saying that it's rotation. Show me the rotation in this map. All I see is a complete bloodbath. Throw it down in the comment section below if you see anything other than that. And I know, HC, you're going to talk about shorting the video. My friend, that's coming very, very soon. We're going to be talking about options in the future, how to basically buy them, how to play them on earnings, talking about spreads, all that for all you guys. So make sure you guys stay tuned for that. Make sure you subscribe down below. Throw a like on the video as always. And thank you all so much for watching. And I'll see you in the next one.